All right. So here's our first one. It's a differential analysis for a discontinued product line. Okay. So here's our condensed income statement for the Warwick Beverage Incorporated, and they're thinking about getting rid of Mango Cola. I know when Mango came out with Mango Pepsi or Mango, it was pretty darn good. So maybe they should keep it. But so sales, cost of goods sold, gross profit. So we can see there's an operating loss of $3,800,000 on this product. It's estimated that 30% of the cost of goods sold represents fixed factory overhead costs, and 25% of the operating expenses are fixed. So because Mango Cola is one of many products, the fixed cost will not be materially affected if the product's discontinued. So it wants us to do this differential analysis. So if we continue Mango Cola, then we'll continue to have this sales revenue of $15 million. If we discontinue it, we'll have no such revenue. So the differential effect. What? Right here. That's the sales revenue of the product. No, you're okay. Good question. All right. So our variable cost of goods sold. This tells us that 30% of the cost of goods sold represents fixed factory overhead costs. So 70% then is going to be variable. So I'm just going to take this 10,800,000 multiply that by 70% or 0.7, and that's going to be the variable cost of goods sold. Yeah, it tells us here, use a minus sign to indicate a loss. It's not really a loss, but it's a cost, right? Our variable operating expenses. This tells us that 25% of the operating expenses are fixed. Therefore, 75% of the operating expenses are variable. Okay, so I'm going to take 800,000 or 8 million times 0.75. So $6 million in variable operating expenses. And then to find our fixed costs, unfortunately, we have to, in essence, take 30% of the cost of goods sold and 25% of the operating expenses. So I'm going to do that by saying oops. I'm going to say 10,800,000 times 0.3 plus 8 million times, what was it, 0.25. So that's my fixed cost, 3% or 30% of the cost of goods sold and 25% of the operating expenses, 5,240,000. So my profit or loss on that one, if we continue with Mango Cola, should be negative 3,800,000, right? All right. If we discontinue the Mango Cola, what will be our variable cost of goods sold? It's variable, so it's zero, right? If we don't produce any of it, we won't have any variable costs. How about our variable operating expenses? Zero. But our fixed costs will still be there. It says the fixed costs won't change, whether, either if we discontinue it or if we don't. So now to do the difference, that make sense? Everybody follow that? I went through it pretty quick. So we're going to actually do worse by discontinuing it, right? We're going to have more loss by getting rid of it. This is kind of another one of those examples of even though we're losing money on it, it's variable. It's making a positive contribution margin. It's just losing because of these fixed costs, which aren't going to go away. So should Mango Cola be retained? Yes, we should continue making it. Are we good to move on to the next one, or give you a second? Okay. So fixed costs is 30% of cost of goods sold plus 25% of operating expenses. Not right now, no, we're in the middle of this. Is everybody good, or should I continue to wait? Yeah, move forward. Okay. So the next one. So here we have Somerset Computer Company has been purchasing carrying cases for its portable computers at a price of $24 per unit. The company operates below full capacity, charges factory overhead to production at a rate of 40% direct labor cost. The unit cost to produce a comparable carrying case is expected to be as follows: direct materials, direct labor, factory overhead, so $24.80. If Somerset Computer manufactures the carrying cases, the fixed factory overhead cost will not increase, and the variable factory overhead costs associated with the cases are expected to be 25% of the direct labor costs. All right. So if we make these, then our direct materials are $8. All of this is the information given to us. Our direct materials are our purchase price is $0 if we make them, right? Our direct materials is $8. Our direct labor is $12. It wants us to break out the overhead. So our fixed factory overhead costs will increase. All right, so our variable factory overhead is 25% of direct labor costs. So if our direct labor cost is $12 times 0.25, that's $3. So our variable is $3, and then our fixed, if our total factory overhead is $4.80 and $3 of it is variable, then the other $1.80 is our fixed factory overhead. So that gives us our total cost to produce these of $24.80. I think it'll work either way, because you did them with negatives and it worked also. Okay. Well, that's nice, I guess. They let you do either way. All right. So the cost to buy them is $24 per unit. But that fixed factory part, overhead part, doesn't go away, right? So we're still going to include that $1.80. So we're actually going to call our cost to buy $25.80. Because to call it $24 is, well, it's disingenuous, right? So again, we can check it real quick to make sure we're on the right track. And then the differential effect is just what it looks like. So I'm just taking the make minus the buy. So this means it's going to cost us more, $1 more per unit to buy it over making it. So then it says, assuming there is no better alternative use for the spare capacity, it would blank to manufacture the carrying cases. It would be advisable to manufacture them, right? Because we're actually saving $1 per case. Fixed factory overhead is blank to this decision. And so if we look here and we see that there's no differential effect between the two, then that means it is irrelevant to the decision because it's going to be the same either way. Oh, what did I miss? Oh, it probably wants zeros here. I think if those are graded, it should put a red X there then, so you know. Otherwise, you're like, wait, what did I? All right, there we go. That's it. I even finished on time. You're welcome. Have a great day. Choose to be happy. All of those things. I refuse to choose to be happy. You cannot make me.